Government and Nonprofit Accounting, Chapter 2. Chapter 2 continues a lot of the vocabulary and concepts started from Chapter 1, focusing in on government accounting principles and concepts, regulations, and rules. Okay, so first we start by talking about the financial reporting for government entities, who the primary users are, and what they use that information for. The main purpose, of course, of financial reporting is to provide information to users so they can assess a government's accountability. Those primary users are citizens, oversight bodies, creditors, bond issuers, so people who are interested in how that particular government entity is performing. Those financial statements should, of course, be understandable, reliable, relevant, timely, consistent, and comparable. So they should be useful financial reports that we can use for multiple purposes. Okay. So GASB states that governments need to communicate information to citizens and others, and that the information that they report needs to be useful. Okay. So they have a concept statement, number 3, and the chapter talks about statements 1 through 6 of GASB reporting concepts for government reporting. So we need recognition in the financial statements, disclosures in the notes, presentation of required supplementary information that we put with our notes. So if you remember from chapter 1, that we had requirements to include financial statements, disclosures, and notes to the financial statements, and required supplementary information. So for recognition and disclosure, that information needs to be measurable with sufficient reliability. So anything that meets that, of course, we're going to have materiality, things that if it's not material, it doesn't need to be recognized and disclosed in the financial statements. We know that materiality varies depending on what unit, how large a business or government entity is. We should use notes to provide additional information to the financial statements. This is also similar to business reporting. That required supplementary information is any information that is essential for decision making, and information that allows for context of the financial statements and notes. There are examples in the text of what different financial reports might look like. There are, of course, different CAFRs, which we looked at one in chapter 1, and there will be different areas where you will look at different cities' CAFRs and review them. Okay. Different examples of required supplemental information include the management discussion and analysis, the MD&A, any budget to actual schedules showing the variances, and pension disclosures if governments have defined pensions where they have to provide pensions for employees. Okay. And then other supplementary information, useful, but it's not essential to the understanding of the financial statements. A lot of it is found in the statistical section, such as demographics of the government, how many people live there, what their ages are, what their income is, how much houses cost in the area. Those kinds of things can be included in the statistical section. So before an item can be recognized, it must meet the definition of an element. Okay, so the 7 elements that we're looking at for government financial statements are assets. So resources with service capacity that the government presently controls. Deferred outflows of resources. This is the consumption of net assets that applies to a future reporting period. Then the liabilities, so our obligations to pay or sacrifice resources. Deferred inflows of resources, so this is things that we plan to purchase in a future reporting period. And then our net position. So the net position appears in the statement of financial position, which is one of the main financial statements that governments prepare. So this is assets plus deferred outflows minus liabilities minus deferred inflows. Of course, recognizing that we don't have an equity section in government disclosure like we would have with a business. There are no stocks. There is no income that we're saving. So there's no retained earnings. We have inflows of resources, acquisition of net assets by the government in the current reporting period. Okay. Resources are also revenues. So we can get revenues through taxes, but we can also get resources through various other ways. People can donate physical property to us. People can for public use. So those kinds of things are included in other resources. And then we have outflow of resources, which is as we're using up those net assets, as we're paying out things using tax dollars. We often use the term expenditures instead of expenses with government accounting, so that is a terminology difference. Measurement attributes. So GASB identifies 4 measurement attributes. And this is much like when in Principles of Accounting, where we're talking about if you're going to use LIFO, FIFO, weighted average, or specific identification. This is very similar in that this is the way that we can determine initial amounts and remeasurement amounts for assets and liabilities. So we can use one of these 4 different methods. Okay. So we have historical cost, which is the cost that it was initially recorded for, fair value, replacement cost, which is the cost to replace. Of course, fair value is the current considered value, and then a settlement amount. We will look at each one of these separately in future chapters when we're doing calculations for our assets and liabilities. And so we're going to go through the calculations for each one of those in a future chapter. We have our basic financial reporting model, which has our basic financial statements, and then we separate out between government-wide and fund information. So government-wide are our full government activities, and then funds get broken out into multiple different activities. And we're going to learn about all of these activities then through various future chapters. Okay. When we look at government-wide financial statements, our measurement focus is the use of economic resources. Our basis of accounting is accrual accounting, and our accountability is operational. So how is the government operating and using those economic resources that are provided by the citizens? We have financial statements, these 2 government-wide financial statements, the statement of net position, which is comparable to a business's balance sheet and reports what our current financial position is. The other is statement activities, which reports the expenses and revenues, similar to what you would think of as an income statement, where we look at the revenues and expenses. We have separate columns for governmental activities, business type activities, and component units. Governmental activities are core services. Business type activities are things that generate user fees and operate similar to a business. These would be things like utilities, water, electricity, golf courses where there's a fee, a municipal golf course, but there's a fee to use it that goes to the government, and then fiduciary activities and funds. Okay, so we have these three different types of funds, and then there are multiple types of funds within these three types. So we have governmental funds, proprietary funds, and fiduciary funds. So when we look at those three different type of funds, governmental funds, they all are looking at what's the accountability. So governmental funds, we're looking at fiscal accountability, and proprietary funds and fiduciary funds, we're looking at operational accountability. Governmental funds use a modified accrual basis system of accounting. And we're going to look at the flow of current financial resources. Proprietary funds and fiduciary funds look at the flow of economic resources. The accounting rules are just a little bit different for each of them, and we're going to have a chapter focused on each of the different types. I think I'm going to pause there. I'm trying to keep these to 15